Welcome back, everybody, to Volatility Trading Strategies. So this next part in the Volatility Lingo series is all about finding the average value in a data set. Now, that might sound easy enough, but the truth is there are different ways to look at the average, and it really is going to depend on what you're trying to determine and what your data set looks like. So in this short video, we're going to go over the 3 most common ways to look at an average and determine which one is best in each situation, because if you use the wrong one, you really can get some bad conclusions. Now, going beyond these basic terms, if you want to see my live trades and follow my actual portfolio, there's a no-obligation free trial on my website. You can check out if VTS is right for your long-term investing goals. Now, you may have heard of these before, but the 3 most common forms of average are called mean, median, and mode. Now, they're all very easy to calculate, but like I said, the most important part is knowing when to use each one of them, which we'll get into in a minute. But since it's always best to learn things through an example, we're going to show all 3 types of average of the following data set: 3, 3, 4, 6, 9. So the first type is called the mean, or the arithmetic mean. And this is the most common average that you'll see. In fact, it's probably the one that you have in your head right now, where you know to just add up all the values and then divide by how many values there are. So 3 plus 3 plus 4 plus 6 plus 9 equals 25. And then we divide by the 5 values, and we get an arithmetic mean of 5. So for a real-world example, if we want to know the income of the average American, we can just add up all of the incomes and then divide by how many people there are. So in 2020, the mean income for the average American was $62,500. Now, does that track with what you think the average experience of the average American is? Probably not, and I think you know why. So let's try to do a little better. The second way to determine the average is called the median. Now, the median is the middle value in a data set. So you just order all the values, say from smallest to largest, and the median will be that middle value in the ordered series. So for our simple example first, 3, 3, 4, 6, 9, the median or middle value is 4. Now, like I said, you probably already know why that mean value isn't a very good way to measure the average income of Americans. It's because some Americans make insanely high incomes, and all those values on the far end are going to bring up the average for everybody. So if we use that median instead, the middle value, and we just order all of the incomes, it turns out the middle number, the median American income, is $43,200. Now that's a lot better. Knowing that half of Americans are above that value and half are below, it's a better estimation. But we can actually even go a step further and try to capture the true experience of the most number of people. Because the third way to measure average is called the mode. The mode is the most frequently occurring value in a data set. Going back to our simple example, 3, 3, 4, 6, 9, the mode being the most frequent value is 3. It occurs most often. Now, getting the mode of American incomes wasn't quite as easy. I had to group them in $5,000 increments, but it turns out the most number of Americans fall in that 25 to 30,000 range. So the mean income of $62,500, that's not the average. The median does a little better at $43,200 because half are above and half are below, but it's actually that mode that captures the most number of people. So I would personally say if we combine the median and the mode together, we can say that the average American income is probably closer to $35,000. All right, so just a quick side note here. If you do happen to have a data set in Excel that you want to actually apply these averages to, I'm sure you can Google it quickly on your own, but just to be thorough in this video, here's our basic example, 3, 3, 4, 6, 9. Remember the mean or the arithmetic mean, you just add them up and divide by how many there are. And the Excel function, you just say average, you get your data set, and that's it. It's going to be 5. The median is the middle value, and again, in Excel, you can actually just type median, and then go ahead and drag all your data set, and it's going to be 4. Remember that middle number is 4. And then the mode is the most frequent value, right? In this data set, it's 3. For the Excel function, you're just going to do mode. And that's going to get you the answer. So super easy to do this. You'll probably have a pretty long data set. You can just get the function and get all the averages that you're looking for. And of course, the point of this video, make sure you're using the right average type for your specific data set and the question you're trying to answer. So now as another example, let's do the mean, median, and mode for something that's much more relevant to all of us volatility traders out there. Let's try to determine the mean, median, and mode for the VIX index going back to 1990. So again, the easiest one, and the most common form of average that people do, is just the arithmetic mean. This is when we add up all the values and divide by how many values there are. In the case of the VIX index going back to 1990, if we add them all up and divide by the number of trading days in the last 31 years, we get an average VIX of 1949. Now, if you're an avid volatility trader, I hope you're saying to yourself, well, that sounds a little bit high. And you'd be right, that doesn't really represent the average. Because just like with American incomes, there are times when that VIX index goes extremely high, and that'll definitely bring up the average value. So if we move on to the median, remember this is the middle number in an ordered series of numbers. Here we have the VIX index values back to 1990 ordered from low to high. On the right there, you can see all the high-end values that will bring up the average. For example, the VIX hit 82.69 in the heart of the pandemic, and all the values a few weeks before and a few weeks after that date can seriously skew the results. Same thing for the financial crisis. But the median takes care of that by only looking at the dead center middle value, which in the case of the VIX index is 1744. Half the values are below 1744 and half are above. Now remember, with American incomes, the median was actually better than the mean because it factors out all the millionaires and billionaires, and it's a much more accurate number. But the mode, the most frequently occurring value, remember the most number of Americans fall into that 30,000 a year range. Well, we can do the same thing for the VIX and find the most frequently occurring value. If we rank all the VIX values in sections of 1 full point, we can see that it does spend most of its time in that 12 to 13 range, and then after that, the 13 to 14 range. The mode of the VIX, which oftentimes best captures the true experience of something, is actually 12.42. This is why when the VIX index is in that 11 to 14 range, it really doesn't feel that abnormal at all. In fact, it's very common. This is often why you'll hear a mean reverting index like the VIX actually referred to as mode reverting. It's because values in the 11 to 14 range are the most common. So using the right type of average is really important to best capture that data set. The mean, or the arithmetic mean, is definitely the most common one that you'll see. But as we saw, the median oftentimes does a better job because half are above and half are below. It's that middle number. And the mode, we use that when we're trying to capture the experience of the most number of points. So in my opinion, the average VIX is not 20, it's probably closer to 14. And the average American income, it's not $62,500, it's probably closer to $35,000 for the most number of people. Again, always use the right average and you'll get the best representation of your data set. And as always, if you want to check out what we do at VTS, there's a free trial on the website. You can see all of the live trades and see if it's right for your long-term investing goals. Thanks for watching. Thank you so much for watching the video. So don't forget to subscribe to the channel and go check out my website right here. There's tons of articles and videos on there, as well as a free trial to join the VTS investing community. What have you got to lose? Come see how I personally navigate these unruly markets. See you next time.